welcome to our fourth quarter update for our industrial segment. And when I say industrial, what that means to Greenleaf is this is typically a more suburban style asset. It's single story, brick construction. It's got a lot of parking. It's got some roll-up doors. It has dock-high doors. Those are the ones you can drive an 18-wheeler into and back it up to it. But most importantly, one whole side of the building is going to have normal glass kind of office walk-in doors. That's what we expect to see when we think about industrial flex. This is a very multi-use asset. And as we go through the quarterly update here, you'll see how that kind of plays out in the types of leases we were able to sign. Overall, our portfolio now consists of 375,000 square feet of this flex style use deals, everywhere from Atlanta up to North Carolina. Within this footprint, we have about 75,000 square feet that's vacant. Now, for us, that's exciting because our typical acquisition is buying a below market rent asset that's typically owner occupied or had some form of self-management for many years. And we were able to come in and release this space. We have leased a ton so far in 2022, and we've seen very strong demand. So the fourth quarter, we leased 2 more spaces. These are both around 2,500 square foot tenants that came into our facilities. And we also have a roughly 12,000 square foot tenant that we are negotiating the lease for right now. Now, within that vacancy, almost all of it stems from one deal that we purchased in 2022. That's our Dawson Flex deal. And it has 3 vacant suites that we are working on leasing right now. That was known going in, and we were excited about that because we got it at a very good basis, and we can release those. Even if we just hit 20% below market, we do very well. We think about the leases that we are seeing, thinking about these flex spaces as being highly adaptable. That's really what we like about them. There's so many uses that could go into it. We're not tied to one thing. We had 2 office tenants. Those are the recent ones that moved in. And they're purely office. They're using the front entrance like a main office. They've got a big open space that they can build out and use how they want. And they may or may not even use that roll-up door that's in the back. These suites being 2,500 square feet, a typical lease we have there, they're paying between $18 and $19 a square foot. We provided them a little upfront TI, so that's roughly $10 a square foot that they're receiving to help make that space something usable for them. And we partner with them and work with them on executing that build-out plan. Now, on top of that, we're getting 3% annual rent escalations for a 5-year period with that lease. That is excellent for us. That's exactly what we're looking for. We're looking for that 2,500 square foot business that can come in there and do that. Now, if we go to the other side, we talked about a 12,000 square foot lease that we're currently negotiating. This is for a purely warehouse style user. So they do not plan to build out a big portion of the interior. They have a lot more space. And now with that, we have a significantly lower upfront TI. That one, we're only looking around $2 to $3 a square foot. And we're also getting a 5-year lease, but it's at a lower rental rate. So we're seeing around $11 or $12 per square foot when we have that kind of pure warehouse manufacturing tenant that's in there. Now those also, they have a slightly higher rental rate escalation. So we're seeing 4% rental rate escalations there. Now all of these, why we like this space so much is those are annual escalations. This is a lot higher than things have been in the past. And I know if you watch some of our other updates, we see a multifamily had 12% last quarter. Well, yes, but that's not always the case. And this 3 to 4% is locked in for a 5-year period. So we're very happy with those lease terms as we look out 5 years for predictable and stable cash flows. So when we think about what opportunities does this lead us to, our buying footprint is pretty narrow in this space. We think, what opportunity can we take advantage of? It really has to be a building with some current tenants that's creating cash flow. So we can, one, we have to be able to get a loan on it. We can only get a loan if there's current cash flow that's associated with the deal. We do want something that, it's got to have some love that it needs. We enjoy going into those types of assets and finding out what problems we can dig up and solve. So there's got to be that aspect of it. We'd prefer there's some vacancy, and we prefer there be shorter term leases. Other part is we're only really looking for buildings that are between 20 and 80,000 square feet. So you take all those things combined, and it's not a whole lot of opportunities that fit into that very specific income requirement, specific tenant type, and specific size of the asset. Those deals, when they're trading, we're able to acquire those for around $90 to $100 a square foot, depending on the lease terms that we just went through there, whether it's $10 in TI that's going in or $2 in TI that's going in. We'll end up somewhere in the mid-90s to the $110, $115 a square foot. This is where the bulk of our acquisitions have existed, and it provides us with a good basis, a lot of flexibility to work with tenants anywhere from $11 to $20 per square foot in rent. And another challenge is that a deal size of, call it this 20 to 80,000 square feet, we're looking at deals that cost $2 to $8 million. And that has always been really a sweet spot for us. And there's not a whole ton of competition in that. It's hard to execute a lot of these smaller deals, but we also feel that we're getting a better basis in them because it is a more challenging deal to execute. So overall, distributions for this quarter, most of our deals, when we bought these and we're going into them and we're doing TI improvements and we're building up our rent rolls, we're distributing the net income that we earned. And about half of our deals are hitting the pref. The other part are hitting just the net income that's going out as we burn off some of the concessions, some of the TI dollars we spent and rebuilt our reserves from all the leasing activity we've had. Again, we had a lot more in the second and third quarter. In the fourth quarter, with only, really we're talking about 3 leases. We only have a few spots that are even left to lease. But every time a tenant's moving in, we spend those TI dollars. It delays our distributions a little bit as we earn that money back. So if you go into your investment portal, the Documents tab, that's where you can see all of our investor reports for every asset. And on the Activity tab, that's where you will see all of your distributions. And again, these are going out on the 20th. They take a few days to hit your account, but you should see those on all of our deals. Thanks for watching. Please let us know if you have any questions, especially on the industrial leasing. It's an exciting time right now, and we are seeing lots of different and varied demand for tenants that want to come in. So please let me know if you have any questions. Thanks for watching. For more tips on operating and investing in real estate, please check us out at greenleafmanagement.com or find us on YouTube and Spotify.